Welcome back to another video. Today we'll be talking about a unique feature of YouHodler, which is a crypto lending platform that offers also more sophisticated trading features such as Multi HODL, which is a tool that allows you to do margin trading with your cryptos and potentially increase your assets or lose them all. In this video, I will walk you through this feature and share with you how I lost over $1,000 in 2 hours and what's good about it. My name is Jakub from P2P Empire, and if you are new to this channel, P2P Empire is an independent project where we test various platforms with our own funds and share our experience with you. This way, you get a better understanding of how your investments may perform, which will help you manage your expectations. None of the content is sponsored, so we can share our honest experiences with you. If you want to see more content from this channel, don't forget to subscribe and like this video. In this video, we'll be specifically talking about the Multi HODL tool. If you want to watch the entire review about YouHodler, you can click on the video in the upper right corner here. So Multi HODL is mainly known for its crypto savings account, which is a great way to earn interest on your crypto assets. The platform does, however, offer many more features which might significantly influence the performance of your portfolio. One of those features is also Multi HODL, which is in its easiest form a margin trading tool. In short, you can trade the volatility of a cryptocurrency pair with additional leverage. YouHodler does point out the benefits of this tool in various promo videos and blog posts, but let's be honest here. This is a high-risk trading tool and a great way to lose money in a very short period of time. So how does Multi HODL work? First, you need to register and open an account on YouHodler. Then you have to deposit some crypto to your YouHodler crypto wallet. After you have added the crypto to your account, you can click on the Multi HODL feature and select the currency pair which you want to be trading. YouHodler will show you some popular cryptocurrencies, but you can choose any of the supported currency pairs. You can also star some of them to be able to see them on top of the screen. After you have selected the currency pair, you can review the chart over a specific time period to get an idea about the volatility of this cryptocurrency. Next, you have to select whether you think the price will go up or down. Let's say you think it's going to go up. In the next section, you can review the chart again. I suggest you switch to the candlestick chart and have a look at the short-term volatility. You will likely be trading for just a few minutes or hours. It's not a trading tool that's suitable for long-term traders, so the 1 minute, 5 minute and 15-minute candlestick chart are more relevant to you. Next, you have to select the source of the collateral which you will deposit. This means that if you want to trade LTC USD pair, you don't need to hold the Litecoin in your wallet. You can trade the volatility with whatever other asset you hold. In the next step, you should choose how much collateral you are willing to deposit. If you want to experiment with this tool, I suggest you start with a very low amount that you don't mind losing. You can then select the multiplier. Keep in mind that the more you leverage, the smaller the gap to the margin call value. You should plan for a short-term position, as the longer the position remains open, the more volatility you will be exposed to. Be aware that if the price moves to another direction, chances are that you will lose your position faster. In any case, it's suggested that you review the take profit and margin call values by expanding the drop-down view. The more relevant chart that you should review is the candlestick formation in short-term intervals. Your take profit value should be visible on the chart. You can also adjust the stop loss change so you don't lose the entire trade. Of course, the expected profit will be smaller if you want to hold your position for just a few minutes or hours. Please always keep in mind the volatility of the currency pair. Surely, your price prediction can be accurate in the long run, but you can't time it exactly, which means that before the value reaches your take profit amount, it might as well hit the margin call before doing that. If you are aware of what might happen to your position, you can accept the terms and conditions and start the trade. Right off the bat, you will start with a loss due to the rollover fee. You can always review, edit or close the deal in your Multi HODL portfolio section. If you click on the deal, you can see how the price is developing. You can again switch to the candlestick chart and choose a shorter time frame to get a better idea of the current price movement. You can then review the collateral amount, the borrowed sum for this deal, the rollover fee, and you have also access to the legal contract for this deal, which will also be sent to you to your inbox. By clicking on the Show Detail drop-down section, you can learn more about how Multi HODL works. You can always adjust the take profit and margin call values if you wish to do that, or close the deal at any time. As you can see, there is plenty of functionality here. What I personally like is the fact that you will get a legal agreement between you and YouHodler, which is something rather rare in the crypto lending space. Another perk of YouHodler is that you can start multiple positions, which means that if you suddenly see that the price moves into a different position, you might as well open a second deal and lower your losses from the first one. Again, predicting the price movement in a short time frame is impossible, so be wary of this strategy. So now you might be wondering about my experience when I tested this feature. Well, I wanted to test YouHodler for a while, and the current promotion with the chance to win a Tesla seemed to be a good opportunity. Now, I tested Multi HODL on 2 different deals with the LTC USD pair during a bull run with a leverage of 26 and 29 times. In the first deal, the price moved by 3.44% in the opposite direction, and I lost 3 Litecoin within 1 hour. In the second deal, the price moved by 2.85% in the opposite direction, and I lost 2.16 Litecoin within 1 hour and 20 minutes. So in short, I lost a bit more than 5 Litecoin, valued at $1,115 in 2 hours. Certainly, one could come up with a lot of arguments, such as the extreme volatility during the trade. You could also argue that the loss on 2 deals might not show the entire picture of the Multi HODL tool, which certainly is correct. It may, however, show you a possible outcome if you don't have enough experience with Multi HODL yet. Surely, you can make some profits as well. The chances are, however, not that high as losing your money. In terms of risks, you should be absolutely fine with losing your committed funds. It's basically like day trading on steroids. Margin trading has nothing to do with long-term investing. It's a high-risk strategy that may lead to the total loss of the deposits that you have committed to that deal. So what I have learned from this experience is that this is indeed a very short-term trading with high volatility and high risk. Unless you can predict the price movement on a short-term period, you will likely lose your money. The reward and risk ratio is therefore not in your favor. There are also no Multi HODL statistics, which would be indeed very interesting. Some margin trading tools on the stock market do need to show the percentage of users who lose money. YouHodler doesn't. On the other hand, YouHodler is very transparent with the terms and conditions, and there are no sneaky clauses that you should be aware of. You will also receive a legal contract to you via email. So what's so great about me losing $1,000 in 2 hours? Well, if you are concerned about potential scams in the crypto lending space, I don't think YouHodler is one. The platform is not very transparent about statistics nor financial reports, as they are a private company. This is something that we have informed YouHodler about a few times already. If you have been, however, in the crypto lending space for a while, you do realize that the business model of the platform has a direct impact on the platform risks that you are taking when using its services. Now, some platforms don't share how they make money. On YouHodler, it's pretty clear, I would say. The crypto savings account is free of charge, but all the other crypto lending products such as Multi HODL, turbocharge, loans, or the exchange are services for which YouHodler is charging a fee. Those fees can be quite high, which lowers the risk of YouHodler running any shady business on the side. According to the information I've got from YouHodler's CEO, the platform is profitable, and it would make sense as their business model is comprehensive. So what's the takeaway here? Most users that will use Multi HODL might likely lose their money. If you want to test it, start with a very low amount and try to find a good source of intraday price predictions for your currency pair. Also make sure to minimize the risk by setting up the take profit value closer to the current price. The closer the take profit value, the higher the chances that you might catch the right train. It may take longer for you to make significant profits. It will, however, help you to minimize the losses caused by low volatility. So if you are interested in earning yield on crypto and you are not from the United States, YouHodler is a solid platform that you should consider. While I don't like the fact that they are mixing relatively safe yield on crypto in form of a savings account with high-risk trading tools, I do understand the reasons behind it. It's simply how the business model works. YouHodler pays out very competitive rates for their interest account. However, this would not work if it would not be for the Multi HODL and other paid services that YouHodler is providing. While I'm not happy losing money the terms and conditions are clear, and it allowed me to get deeper insights into the business model of YouHodler and share this information with you, which is certainly worth it in my opinion. As with any investment, I do believe that you should set some learning money aside to test some features and gain valuable knowledge that you would not gather otherwise. In the short run, you might lose some money, but in the long run, it may pay off. If you want to try YouHodler yourself, you can use the link in the description below. Now, you should have at least a much better idea of what to expect. If you have tested the Multi HODL tool or YouHodler savings account and you want to share your experience with us, let me know your thoughts in the comment section below. Keep in mind that the crypto lending space is changing rapidly and many US regulators are going after platforms that seem to offer securities. This is a regulatory risk that you should keep in mind when earning yield on your crypto. Luckily, YouHodler is currently not offering any services in the US, which means that the SEC won't go after them. To be up to date about the latest events surrounding some of the most popular crypto lending platforms, read our reviews on p2pempire.com. I will keep testing portfolio on YouHodler to be interested to report about this platform. If you want to get the latest news about P2P lending industry, you can always review our news section or subscribe to our monthly newsletter to get the latest news into your inbox. Before we finish up with this review, some of you might be wondering why YouHodler has such a high score in our ranking on P2P Empire, given the fact that you can possibly lose your money. When it comes to crypto lending platforms, we do consider different criteria, mainly connected to the laws and disclosures that those platforms need to follow. We also compare similar platforms together rather than direct comparisons with P2P lending sites that follow a different business model. So in short, we compare the crypto savings accounts rather than other high-risk trading features. Keep in mind that this video is not a piece of investment advice. Using Multi HODL might lead to the total loss of your committed funds. Always do your own research before you start using certain investment products. And on this note, thanks for watching and I will catch you in the next video.